just give us a quick update on how we saw the first day of trade panning out for this week.
I think it started off on a good note. Definitely from last week's, on Friday, the performance was rather dismal. So I think it was a good start. And we saw some activity on the agricultural sector, as well as Mumias and Kenyan Kobil, Safaricom as usual. And it was good at least to see some investors coming back into the market, although the bulk of them are on the sell side. But I think going forward, there could be some activity as we head into the earnings season. And we expect turnover and volumes to improve from now on.
Let's just quickly focus in on Kenya Airways. That pending cash call has weighed in on the counter, but it recently announcing new stockbrokers. They will join the transaction team that is going to steer that rights issue later in the year. Does this provide some comfort for the market, which has really been selling off this share lately?
I think the move was more beneficial to Kenya Airways than the investor community, because for Kenya Airways, what that does is that it expands their reach so that you can get investors from Tanzania and Uganda buying into the cash call. I think there's still some things to be sorted out in terms of the underwriters and the amounts to be raised, because they're paying some deposits for their planes, some pre-order deposits, and I think it'll eat a lot of money. So there's still finer details about the cash call to be issued to investors and regulatory approvals from the CMA. So I think there's still a long way to go, but it was a good start at least.
As you say, just providing some further impetus to that news flow. Nation Media Group in the media space is one of the stocks that is seen as a defensive in 2012. By some, it is venturing into Rwanda now. It's opened up a new radio station there. It's looking to expand into TV, into print media. What type of opportunities does Rwanda present for Nation Media?
I think Rwanda presents a host of opportunities. The government has slowly been working on its Information Act and controls, because previously I think there was a lot of uncertain as to the constitutional agreement on information. And going forward, once these things start being sorted out, then it presents a huge market. They're starting with KFM, which is a radio station, and will be broadcast in the Rwandan language as well as in English. And it's a good start. It's a huge market, and it follows from NMG's strategy to be an African player rather than just a Kenyan player.
As you say, it's got now operations in Uganda, Tanzania. It's looking to establish itself in South Sudan before the end of the year. Going forward, what type of contribution are we going to see these ex-Kenyan operations making towards their revenue?
I think they'll be marginal at first, because the bulk of NMG's revenues come from Kenya, from the newsprint and advertising revenues, as well as the TV and radio stations in Kenya. But I think it's over the long horizon, I'm speaking 5 to 10 years, then we are likely to see more contribution from Tanzania, from Rwanda, because those economies are expected, at least from the major economies, World Bank and IMF, to grow faster than the Kenyan market. And I think that will be the growth factor for NMG. But at the moment, I think Kenya will still account for the bulk of its revenues.
Let's move on to the banking sector, of course. So when we talk about position taking, that's what investors are doing ahead of full year results to be released there. There's a bit of mixed views on how the Kenyan banking sector is going to fare in light of the high interest rate regime right now. We know that interest rates are the highest they've ever been since the rate was first introduced. How do you think banks are going to fare? Do you think they're going to be as resilient as some are anticipating?
I think they will be resilient. For one, the last time that the Kenyan banking sector had really bad issues in terms of non-performing loans, loan collections, was in the early 90s. And I think the managerial teams have really improved from then on. And both the regulatory oversight as well as the management has improved. And I think that will be a basis for resilience. However, having said that, one has to note that for the last 10 or so years, at least especially since the entry of Mwai Kibaki's government, there's been a moderation in interest rates. And it's only this year, last year in 2011, that we saw now interest rates going out of hand. And I think that will be a huge test for the banking sector. especially with regards to non-performing loans, which are expected to follow with a lag, as well as loan book growth, because Kenyan investors in the banking sector have been treated to profit growth of double-digit 30-40% profit growth, and I think going forward that will be hard to achieve when the loan books are not growing.
As you say, they've gotten used to the accommodative monetary policy, and that has changed in the last year. But when you're looking at profitability and looking at return on equity, Kenyan banks are really attractive. In an African context, they're sitting with ROEs, an average there of around 30% expected for 2012. Equity banks sitting up there with around 32% ROE. You compare that to South Africa and Nigeria, ROEs sitting at 16%. Doesn't this make them relatively a lot more attractive if you're looking to get exposure to African banks?
From that perspective, they do look attractive, and especially with regards to, if you compare South African and the Kenyan market, where financial inclusion is much lower in Kenya as opposed to South Africa, then it does make sense from an ROE perspective. But I think you'd look more at return on assets, because ROE is a function of how leveraged your balance sheet is. And I think from a return on assets perspective, they are performing just as well as the South African and Nigerian banks. And going forward, I think that's one thing you need to be looking at, just the return on assets rather than the return on equity. So, but indeed, they are very impressive ROEs compared to the other markets.
If you're going to pick a bank then for 2012 that you're expecting to outperform, which one would that be?
It's a really hard choice to make. I've always said that KCB and Equity look good, especially Equity, because they're growing their loan books. They've got very good capitalization ratios of around 22, 23%. They have a lot of cash in hand, and they've got a really wide branch network that can really get the loans out, and the SME banking space is looking really good because they're attracting dollar inflows from organizations such as the German Development Agency, and I think that will work well for them in terms of growing their loan book. So I think equity for me looks good.
Equity in the banking space. Your pick, Samora. Thanks very much for your time this morning. Samora Kariuki, research analyst from NIC Securities.